All right, what's going on, everybody? It's Friday. We might just break down below that 80 cog line and get after some VWAP or VWAC, as I hear some people call it. Whack. There was the possibility of White House risk this afternoon, so that kind of weighed heavy on any 0 day opportunities that might have been willing to play. And this reversal off the high stalled out. I didn't like that run back up very well. It was an equal high. And what we look for on those kind of runs back up like that is an equal high or a new high to kind of signal that a continuation lower is less likely. So it's not to say that we can't go lower than this pivot low here at 75, but it is a reduced probability because we set an equal high there. That's that's just the way it works, right? So it's not about drawing a line and saying we can't do it. It's just recognizing the probabilities suggest it's less likely to fall lower than the pivot that I just marked because we set that equal high, or if we had set a higher high. Yeah, yeah. So let's see what we have in the list. I can't remember, but I was pretty sure we had a list for today. Dang, I could have swore I had something in there for today. Not now. You guys got anything in particular you want to get on to? A double top is considered bearish, uh, but there's an argument about what is considered a double top. So, in my world, the way that I like to do things, there's always this question between um, the cup, which might have a handle and then go higher, and a double top, which is bearish, and then we go lower, right? So, how do we distinguish between one or the other? So, the way that I like to approach this problem is by looking at the previous pivot and having a little bit of a discussion, right? The double top is often referred to as a bull trap. Ooh, got there. So if it's a bull trap, I really got to get bulls in there, right? Because if the creature doesn't get into the trap, you're not going to trap it. So if you're a bull and you've got price that set a high and now it's coming back up and it's looking at that same high as before, are you going to get in it before it breaks the high to go long? Are you gonna get in it when we're still underneath that previous high? I don't know about you, but I wouldn't, right? Because I would be concerned if I try to go long before we're above that previous high that we might just hit that and fall, right? I want to get higher than the previous high at least. And I'm sure I'm not the only one when I think that through. So if price is likely to make a higher high for a bull trap, then when I'm looking at two tops and I'm trying to gauge if I'm looking at a double top or a cup with maybe a handle, and I'm trying to decide if this is going to be a continuation higher or a reversal and go lower, then that's the way I'm going to approach it. So now that we have that discussion, we come back and look at the ES. If we have a double top, a double top can equate to a cup. A cup is bullish, and that's a continuation higher. We need to get to a smaller time frame. So we set the high, we run down, and we run back up. If we make an equal high or a higher high, then we have a chance to trap those bulls and shoot down really fast, like a blow off top reversal, and those bulls that are trapped are going to sell and add to the selling, and will go down really fast. We get that big red bar and it's just this massive dump, which is awesome. I love it. But if we don't see that behavior, then we got a warning that we don't have uh, a bull trap. Well, we didn't break above that previous high, so no creature got in the trap, no bull was captured, and we didn't get that big, sharp, fast reversal either because we didn't have any bulls in the trap. So we can analyze it in real time as it is unfolding and ask, what do we got here? It's a double top. Double tops are bull traps. Where's the bulls that got trapped? I don't see them. So I don't want to call it a double top. We could say it is because technically, in theory, it is a double top, but I don't want to look at it as a double top because that's a bull trap, and we didn't trap any bulls. So we could say, well, it's an equal high or a lower high, because even a lower high would work. If it's a lower high or an equal high, it's likely that it's a cup, maybe a cup with a handle, and that would be a continuation higher. Now, we're just sitting here fading lower, so it's not a cup, it's not a cup and handle, but it also wasn't a double top with a bull trap. And it seems like neither one played out. But when I'm watching them form, that's the way that I approach it. And this would be a micro double top too. The micro part is really important because this spanned the space of more than 24 hours. That would be a really nice double top, especially if price broke the previous high and went higher than that, which we can see here that it did. So there was our high. We ran back up and we broke that high and we went even higher, stalled out at the 111 and had to move down. Now, this doesn't always work out that way. One, price can do whatever it wants, and two, patterns are a representation of what could happen, not a guarantee of what will. So it doesn't always work. But when I'm trying to gauge what we're going to get, double bottoms, double tops, cup and handles, inverse cup and handles, that's the way that my mind tries to work out the details. The same thing could be said about this low here. If we were to flip everything around and run it the other direction, we had this low, we came up, came back down and broke lower than the previous low, stalled before the 111, but we would still call that the 111 reversal. It is a bear trap because bears were able to get in it, and then we go the other way. But is it tradable? I don't see the bears getting trapped. They're not puking their position. I don't see them buying aggressively. So we don't get that signal. I don't see a trade. Same thing with today or with this other one that I showed where we reversed off of the high. It reversed with good selling, not as solid as it could have been. And then this was news. So we don't even want to count that, right? That wouldn't be fair. We just want to count this part. It looked a little bit like we had some bulls trapped, but I would have wanted it to be more aggressive than that. It was okay. I'd take it, but like so when you go and you do your analysis and you're picking up on these patterns, look for that confirmation that should be there. Every pattern should have some form of a confirmation that we can use. Cool, cool. That's the way my mind works on that, anyways. We did get a higher low here. And if I ran this line forward, we can see the whole thing stalled out, right? That kind of an ugly rising wedge has stalled out, flattened, got the equal high, the higher low. We need to see what this next level of price action does on whether or not we're going to stall out here or if we're going to stall out closer to the top. Stalling out here is more of like the midpoint of this, or maybe the midpoint of that. I think that's probably more accurate. A midpoint of that. So if we stall out here, it's more likely that we break this low and go lower. If we stall out here, less likely. But we need to see how this next level plays out. I'm kind of curious if we're going to get a trade called the 1-2-3 fail. The idea on that would be that even though it's an equal high, we would count this as one. And then we run up and we set a lower high, and that would be two. And then, maybe we get three and down we go. Sometimes it's just 1-2 and we fall, but we still call it the 1-2-3 pattern. So looking to see that play out. I gave up on my trade though. I'm already out of that position. Um, I'm not one to just sit in and hope that it all plays out. And I was in with a lot more. I had just faded the play. That was kind of what I was looking for, that lower high and then a rollover, but that's not what we ended up with. Kind of goes back to the logic of know what your trade looks like, right? I came across this. This isn't my chart, meaning I didn't create it or I didn't think it up, but I found this a few months back and I thought it was really interesting. Um, this came from a 30-year analyst. The guy's been around for a long time, and it's an old school thing that we're looking at here. This is unemployment level, permanent job losses, so PJL, and the chart is LNS, and then all those numbers. I'm not quite sure what the numbers are all about, but if we look at the PJL using a 14 period RSI, and that RSI gets above 60, then we are confirming the chances of a recession. But it's a two-part chart. So this is one, and we are above 60. And then there was this chart. Nope, not that one. Ah, there's two. There's another one. Yeah, I think it's this one. Yeah, unrate, civilian unemployment rate. And this one also uses a 14 period RSI, which we can see I'm using. And we're on a 3-month unemployment. And this needs to get above 50. And we're not quite there yet. So when both of these charts signal that recession, the possibility of a recession is significantly increased. And right now, I don't hear anybody talking about recessions out there. So I found that really interesting that we've already triggered one of the criteria of the two charts. I don't know if things are going to change with the new way that they calculate all the unemployment stuff. That's been a big deal in the last 2 weeks. So maybe the numbers are going to need to change in this, but that was kind of surprising because, I mean, like, nobody's talking recession right now, right? I don't quite know what to do with it either. My plan expired today. I didn't catch it until 20 minutes ago. Huh, this thing is trying to log in on my other account or on my other computer so I can just go ahead and update my plan, but it's not signing me in. Quit fighting me. Really? I'm not gonna fight it right now. Do it later. So we've got some charts to look at. Um, I wanted to show you guys a couple of these pictures. All right, this is cumulative volume index. It's from the TC 2000, so it won't match necessarily the cumulative volume index on, say, Thinkorswim or TradingView or anything like that. But cumulative volume is kind of a big deal. It's really helpful to see net buying and net selling. So on the daily, we're still up in these highs, right? We had a little bit of selling this week and a little bit of selling last week, but we came back up. We checked the highs. Um, Everything's still solid, right? We're not like breaking down, getting new lows, anything like that. So cumulative volume still looks really good. This is the cumulative 4-week new high, new low. Stocks that are making new highs and new lows, and it's cumulative over a 4-week period. And look how bullish that is. Now I am on a daily, so we're looking at, for the day, has it significantly changed? Look at the stochastics down here in the bottom. I mean, sure, it crossed over and it's pointed down a little bit, but it's still above that green line. I'm going to zoom in a little. So we're still up in the overbought section, which just means that, think about the gas pedal in your car. Being in the overbought position does not mean reversal. It means that your foot is pushing the gas pedal firmly on the ground. You can't push the pedal any harder. So, from a new high, new low market breadth perspective, we're still really solid too. Yeah, last week was red, but, or not last week, yesterday was red, but we're still within yesterday's range. And we're still sitting way up at the highs, and the stochastics is still stuck across the top. It's still crazy bullish, right? So, I mean, we've always got risk, and right now the risks seem greater just because of the oddity of the risks that we're looking at. But looking at this stuff from a market breadth perspective, we're still doing all right. Now, this is the NASDAQ 100 advancing minus the declining issues, and it's on a daily. And sure, we're kind of flattened out here, but think about it from the point of view that we've been holding this line and we're near the upper edge of this range, like we're getting ready to break out and make a run. And if we make that run with a bullish crossover in the stochastics that comes up and follows it through, then we could get a nice move, right? Like we did here on the crossover and the move up at the bottom of a range with a crossover and a move up. You know what I mean? So that I really look at this and think that's a really bullish looking setup or pattern. This isn't a tradable thing, right? It's not like we want to trade this. This is market breadth. But this market breadth is telling us that things look really bullish out there. And now that is the NASDAQ. So we can look at something like the NYSE. That's this one here. And it is up at the top, but so is the price action. And remember, being up here at the top just means you've got your foot on the gas pedal and you're pushing it all the way to the floor. So this isn't bearish. It's worth thinking about, right? Now, don't get me wrong. There's a lot of bearish signals that we can find. Where are we at? There we go. So we can, look at something like the mags. That's gonna keep driving me crazy till I get it updated. You can see how that mags is breaking down, and that's serious, right? But look what we broke down into the 200 period daily moving average with a nice pen bar reversal in a 1 2 3 6. That's so crazy bullish. The bad thing though is these lower highs and lower lows and this just, you know, this walk down off of the highs since November. And that's what we've been doing, right? It's just walking our way down lower and lower and lower. So it's hard to get bullish with that kind of backdrop. Like I I'm not feeling it. And the weekly, we have room because we haven't come down and intersected that 50-week moving average yet. But we're under the 10, the 20, and that doesn't look good to be under that 10 period weekly moving average at all. So even if we was bullish, we'd have to resolve some of those issues. I think at least in the near term, we could get a bump up in the mag 7 because of this bounce. We could set a lower high, right? Run back up, cross the 10-day, maybe interact with the 20-day, somewhere around 63 and a half or $64. Set a lower high and then fall back down and maybe retest that 20 period, the retest the 200 period. I can see that happening. But for that to happen, that means we're going to rise up. We'll get that bounce and it could last a couple of days, maybe a week. It depends on how violent the bounce is. Yeah. Maybe just enough to trap some people who want to go long in Amazon and Google and Microsoft, Apple, and those guys, and then just trap them and squeeze them. Now, generally, we would look at a ratio that I have, but with my trading view needing to be updated, here's IWF, IWD. And this is a really big deal because it works great for the Mag 7. Man, if you're looking for like a Mag 7 signal to go long, you want this strong, bullish, at the highs, pushing higher. And we don't have that, not even a little bit. We're at 2, which is a big key structural level, a solid reason to bounce right there, bounce off that 2 and make a move up. And we could be making that move up with this indicator coming up from below the 0 line too. But on that bounce, we don't have any reason to think we'll get more than a lower high. So maybe we bounce and we come up into that 215 and reject. But during that bounce, we could see the Mag 7 rise, right? All those ones that I just named. That might end up being a really good bull trap too. Catch those bulls as they're trying to run it up off this reversal. And then watch them get decapitated on that 212 or the 215, whatever the rejection level is. It looks like we're still experiencing that capital rotation too. This is our flight to safety signal or a rotation out of the consumer discretionary and into staples. So things like Coca-Cola, Pepsi, oil refiners, things like that, Walmart, they should do better than Mag 7 names right now. But for how much longer? Because on this one, we're coming down into a key level too. We're not seeing any turn yet on that MACD. So, I'd want to see that we find some structure at this 1.30. But I'd also want to see that Mag 7, not Mag 7, that MACD at least cross over and begin to point up like it crossed over right there, or this really beautiful crossover right here. I'd want that to happen with these two lines, and we don't have that yet. The bull list was really loaded up on that run up this afternoon. That was really good. But now look, we've thinned the herd quite a bit. And the retail, not retail, the refiners have been something worth checking out this year is going to be those refiners. Not necessarily energy stocks per se. I need my refiner list. I shouldn't have turned off trading view. So if you guys trade any of those refiner names for the year, refiners should be doing pretty good. This is the Oil Services ETF OIH. Check that thing out, right? Since the low of 2025, when the tariff capitulation happened and the bond vigilantes forced the president to capitulate, we've flipped over and we've been making this run back up since then. And then it started to get a little out of control, which is what we've got going on right here. Now, it's possible that we're going to need to correct soon because of this. And you can see my measurement. We're getting up into that 111. So if we do keep pushing, we can get up into the 1236. But that's going to be about the long and the short of it right there. Yeah. So then we can correct, we can pull back. Oh, you're just going to keep popping up now? You're going to drive me crazy. Give me a second, guys. Let me just do it. I think I seen Marziti say that there was a holiday that they were running, right? For President's Day, they were running a sale. Oh, Valentine's. I was thinking President's Day. 70%. Very cool. Yeah. Have you still been doing your morning versions of those spreads at all? Yeah. A 100%. Can't argue with that at all. I was talking to somebody yesterday and it was really funny. They were telling me they use volume profile on like 9 different time frames. They're marking out these points of control. They've got order flow and book map and they got all this stuff. And I was like, "What's your favorite candle reversal?" And they're, "Oh, I don't look at the candles. I don't read the price action. I don't do this. I don't do." So all this person was doing is using tools. Only tools. Like how can you even see price? Did that guy reach out to you? Somebody was driving me nuts about that, and I told him to reach out to you about V, adding the V for POC. I had somebody that was yeah, that's why I told him. I told him go talk to you because you're the one that says that, and he kept coming to me at, and I was like, it's not me. Go talk to Marziti. I'm not the one who does that. He was driving me absolutely bonkers. It's the same thing I tell people when they ask me about supply and demand stuff. Go talk to Kevin. I don't use that language. You know what I mean? Like that's his language. Go talk to him. So you should have had somebody reaching out to you about that. It's hard to gauge how much participation we get for people who watch the replay later. Yeah, green is good. I was thinking about your put today, this morning, actually, before the market opened. I was wondering if you had closed it out. Yeah, and it was a fast turnaround. I'm looking for the Valentine's Day event, and I'm not finding it. I had to hunt through 6 different email accounts to find my TradingView subscription. I was like, "Where is it?" Which I did find it, and they did warn me, "Hey, you're gonna expire." But I've been running it for like 2.5 years nonstop, so I knew sooner or later it would die. I wasn't checking those emails, and so I missed it. And now I'm on their website and I'm looking, and I don't see a special. So while I'm here, OIH, oil services, and then refiners and production, AR. This, if I can get any of these to work while I'm waiting. There we go. Valentine Day 2026B. Okay, let's do that. Um, Probably has to be the annual, right? Get this thing started and turn back on. Oh, come on, quit messing around. I'm gonna move them over to a new email that I've been using. You guys ever heard of Proton email? I went searching around. Was that? Yeah. No, no, no. It's not new. It's just a new account. But I was searching around. I was talking to AI, and I was talking to it about new email services that are out there, oh my goodness, there's all kinds of new services. But while I was talking to it, it was mentioning older ones, and Proton really got my attention. So I went and picked up a Proton account. I'm really pleased with it. I did not get one of the newer ones because I want it to be around a little bit before I start using it. But I've been really pleased with Proton. All right, all I got to do is log in and we should be good to go. Hey, speaking of life, my best friend went to the hospital today and they delivered their second child, a healthy baby girl. So cheers on that. They um they were willing to see if they, how it played out, and if they had not delivered by today, they were going to do a C-section. And so of course, they got up this morning, still no baby. So they went into town and had the baby delivered. I just figured if you could choose to decide what day your baby was born on between having it on the 12th, the 13th, or the 14th, why would you deliberately choose to have a baby on the 13th? My mom's birthday is on the 13th. My wife's birthday is on the 13th. So I get it. I'm not against it. Just everybody that I know who has a birthday on the 13th cringes when their birthday is going to land on a Friday. And I just thought, why not eliminate that? Get rid of the cringe. Yes. Yep. I agree with that. I don't want a holiday birthday for sure. So I understood why they didn't want a Valentine's Day baby. I totally understand that. But why not yesterday? you know? The main thing is she's healthy, the mom is healthy, and that's the good thing. So, all right, are we there yet? Finish creating your still? Yes, yes. I read it. I agreed. All right, now are we there? Nope, that's the wrong page. This goofy damn thing. So does anybody have any actual plans this weekend? We call that anger management in the oil field. So this thing has been giving me all kinds of grief over one letter being capitalized. That's what was stopping everything from working. Oh, frustrating little turd. Looks like we're good to go on that issue. Now, can I sign the hell in, please? Of course, two-factor authentication. Of course, got you covered. Are you you? Are you sure you're you? Oh, I don't get to use oh, there's the promo code. I was about to say I don't get to do a promo code. It will. It was just hiding up at the top and I didn't see it. I guess maybe I didn't type it in right. Let's try that again. There's no S. Yeah, I typed it correctly. No spaces, Valentine Day. Huh. Yeah, no, nope. All right, so I'm just gonna no, all good. I'll just get them for 1 month and then solve this issue between now and the next month. All right, just a second. All right. Now we can be done with all that. Guess I did have quite a few tabs open. All right, let me see what was posted in the chat here. This has got my attention. Four-week new high, new low ratio. Bullish and bearish reversal zones. T2122. So I thought I didn't recognize 22. The TC2000 broker has all of these different ones, right? 1, 2, 3, 4, 5, 6, 7, 8, 17, 18, 23, but no 22. So I notice it's got the TC designation or the T designation, but it's not one of their, at least it's not on their website. I was looking for them to have something on the T2122, but I didn't see an article here on the side. I personally don't have an account at the TC2000. I think that it is the worst broker. Um, but I know someone who charts those market breadth tools, and I've got access to the four charts that I was reviewing earlier. And so that's what I lean on when I want to do like a broad analysis, because I usually set them to like a weekly or a monthly and then I look at them. But I personally don't have the software. The TC 2122 looks at the 4 week new high, new low ratio, which is different than what we were looking at because it runs a little bit of a formula after it has those new highs versus the new lows. So it's running a calculation that looks like this: 4 week new highs divided by an entire number, which is 4 week new highs plus 4 week new lows divided by that new highs. So pretty cool, right? Taking a formula from a pool of stocks like a basket. It's by learning these sorts of formulas that I've made my own tools over the years. And I don't know, for this broker, there's nothing wrong with them per se. 30 years ago, they were pretty high on the list for being a prime broker, but times have changed. And I just don't see why I would ever pay to have a broker when there's charting software that I could buy, like TradingView, or there's free brokers that I can use, like Thinkorswim, that are sophisticated and adaptable. They'll do, I don't want to say they'll do everything that the TC does, because it has some really great features when it comes to options trading. The way that you can sort their options flow and really dig into what's going on is fantastic. And the way that you can develop your watch lists. So if you have an ETF like XLF, for an example, and you click on that, it'll show you the holdings for that ETF. Like it's great, don't get me wrong, but I just refuse to pay for a broker, and I've seen that thing go down so many times in the last 3 or 4 years. I mean, all brokers go down from time to time, but that just seems to have issues. Yeah, the main thing is that you have a broker that you're comfortable with. And that's why when people say, "Why do you have so many brokers, Sig?" is because, well, I didn't know what I liked until I tried it out for myself. And asking others, one, I'm not a big fan of asking others. They really can't usually articulate answers to the questions that I'm asking. And then two, it's almost like pillows or shoes. You can't ask somebody else if that pillow is going to be good for you or if those shoes are going to be good for you. You just got to do it for yourself and see if it fits. So I try brokers out. Every new broker I come across, I'm like, well, I'm going to have to get me an account there and check it out, see if I like it. And my go-to is usually to throw $300 in it, maybe 500, depending if they have some sort of restriction, and then, trade it up. And once the account has some buffer to it, I pull out my original limit and I run it if I like it. And if I don't, well, then, I just close them out and move on. I've been really impressed with this public portfolio. Um, I have family members that they're not traders. They have no interest in learning about being a trader, but they wanted to manage some funds of their own. And I found this forum when I was shopping around. I started using it myself, threw a little bit of money in it, and been growing it out. I really like it. I think it's fantastic, but it's not a trader's platform. It's not a place you want to go in and actively be getting in and out of positions and doing all that sort of stuff. It's a great buy and hold place for sure. And slower trading, swing trade sort of stuff. Month to month would probably be a little much, but quarter to quarter or maybe longer be good. But I really like them, and they do options too. I never do options on here, but they do offer options and fixed income. They've got a really nice fixed income setup. Nice. So if you guys haven't tried Public, that would be at the very least just go kick the tires and see what you think. And my newest one is Moo. This one I'm going through the steps to finally get it funded. They rejected me the first time because my account is in mine and my wife's name, while the account for the broker is just in my name. And so they rejected it. And when they rejected it, that got me salty. And I was like, well, screw you guys then. I'm just not going to use you at all. But I continue to keep going to their site. So now I'm working through the process of getting an account here. Yeah, that's a good question. You have to just kind of learn it as you go. There are so many apps and tools out there. I try to highlight the stuff that I use and tell people, hey, this is free or this is cheap. This is good to use because it's pretty much the only way to find the good stuff. I've randomly stumbled across things, but more often than not, it's word of mouth. So talk to other traders, see what they're using, ask questions. Market is one that Kevin brought to my attention. I'd never heard about Market until he brought it to my attention. I I really like that, but it's not free. Financial Juice is one that is free. You don't have to buy a subscription to use it. I think that's a good site. But a lot of these tools that you see people using, ask questions and then go try them out. That's about the best way. And it's constantly changing, especially with all this AI stuff nowadays. It's hard to keep up with so many things that are out there. But don't don't go running out and get a bunch of subscriptions to stuff all at once. I've seen so many people blow money that it gets wasted, right? Because then you have so many apps and tools and subscriptions, you can't use them all. And then, you're spending all that money for something that you're not even using, and it's just a big waste. So take your time. And if it offers trials, don't just run out and use every trial you find. Because then once you've used it, if you have 4 trials going all at once, for an example, you're not going to use all 4 of those sites to their fullest. You're gonna miss a lot, right? So use one until it's done, and then try another one, right? Because a lot of these places do offer free trials. Take advantage of them, but don't waste them with the overlap, right? Just do one and then do another and really try to get the best out of it. Some of my best sites, I actually cycle through depending on the kind of year that I think we're going to have. Investors Business Daily, for an example, is a great site to have, but not in bear markets. For me, if we're in a 2022 bear market, I won't waste my time with something like Investors Business Daily. So, just for an example. So you can have your favorites and then cycle through those from a year to year basis. Old Nazi's back to being flat. S&P is getting close. The VIX kind of gave off a little bit, all things considered. Thinking it might hold up a little better than that. Yeah, I've had such a hard time over the years trying to explain why, right? Like, I think we all want to know why. Why does it work? And yet, I have never been able to fully articulate the why. It does. It does work, and people have to come to trust it in some way, right? Like we have to square that hole to where you just kind of accept it, just like the fib lines or the quadrants or the 111. Why? Why does it work? Man, I don't know. It just does. And angles are just even more astounding, because some vertical line and horizontal lines and then angled lines and start putting all the pieces together. Have you seen that one that puts the lines straight up and down? The time segment, the um, the time segment is to help you intersect with the other tool, right? So if you take your original tool, snap it up there. I'm just going to do it the way they do in the textbooks, all the way to the top, all the way to the bottom. I didn't get the top here. Let me move over. So we got our top to bottom. And now we need to know if we was to pull back to a 786 level. Because like I said, we'll use textbooks. So we'll just add a curve here. We got our 618. And we're looking for the pullback. How long in time do we need to wait before we get that intersection of price to the 618? So then we use this one, the time series, and we'll run it from the same spot. And now we can see the intersection in space and time. That one seems a little too far. That one seems a little too close, but that's kind of the idea behind it. One is running fibs through time, and the other one is running fibs through price. I know it. I know. I get it. The spiral is actually trying to help people understand when the next wave or the next pulse is going to come in. So with these, you can see the waves And if we were trying to figure out when these waves were going to come in, then we could run that spiral one. There was a website that I had come across years ago that was focused on uh, stochastics in time and trying to quantify the wave formation of price. Really got into some deep math too. I mean, it just went nerd. Um, I gotta admit, I enjoyed it a bit, but it's kind of like order flow, where you have to recognize that there's limitations. Order flow, for an example, sucks if you're looking at the Nasdaq, right? Because what order flow? It just it's horrible. Everything has a handicap to something. And when it comes to crawling too deep into the weeds into stochastic wave form for market cycles, that might be great, for someone who's taking 5-year trades and, they're focused on some larger seasonality in a commodity or something. But for what we do, especially short term and day trading, no, those wave cycle charts, stochastic wavelengths, they're just not remotely effective. That's a good chart you got there, sir. Bring that up into the stream so people can see it. Yeah. And look at the consolidation of price against that level. And the rejection down here. Very cool. All right, what is up with my thing here? My trading view went on dumb mode. All right, so the ETF that we want to use looks like this. Really solid run up since the April low of 2025. And then we sort of got that blow off top and it's still been going. It never did blow off, right? It's still going. So when we're going through the list of pure plays and refiners and integrated refiners, all of those different ones, the ADRs and the ETFs, we want to find the ones that look like this. If they don't look like this, then we have to find out what's wrong with them. Why are they not matching the group? So AR does not look like that. EQT, it's trying to push up, but it does not look like that. LNG, nice run, but it didn't start last year in April. We got MPC, Marathon Petroleum, again, the reversal from last year, but then it really started this like megaphone pattern. And the last breakout that it had failed and it came back in again. It's trying to get back out there, but it certainly doesn't look like that ETF. It's had a lot of breakdown and false starts and it's been struggling. Now, VLO, solid move since that April low, good swings. It hasn't tightened up into that sort of blow off top that we saw now, but it had that earlier back here from that low to that high. It had that really tight sort of blow off top run, and then a pullback to check old resistance as new support, a little Busby there. And then, the recent problem is that gap up issue right there that needs to be resolved. So VLO doesn't look bad as a continuation of that move. The problem is it's against the high of this zone, and it's very likely that it's going to pull back and check the low of that zone. So I wouldn't look for longs now in that. Needs a pullback. We got Phillips 66, same thing, solid reversal from last year. Worked its way up, got the blow off. It's trying to work off, you know. Dino, Sinclair Corporation, again, nice reversal. And look at all of those, right? I mean, the beat down in a 1 year time frame from 2023 to from 2024 to 2025, and then the reversal. And we're not even back up to where we were, but it's been a heck of a run, right? And then we stalled out, had that weakness, bit of a struggle, and now we're getting that breakout. And so far, we're keeping it so far. So I like this space, but it's still got a lot of risk, a lot of geopolitical interference, all that stuff. And on the charts that look good, it needs a pullback. The best way to play energy for me, because it kind of matches my style, is a sideways trade in XLE. It could be a condor. The Take USO. This is the actual crude chart, right? The cost of oil per barrel. So WTI crude, you could use the CL futures or the USO. The cost of oil per barrel is manipulated heavily by the government, right? And we're just talking about the US ETF here, or ETN, the USO symbol. Crude is heavily manipulated in price per barrel. If it gets too expensive, the drilling companies will shut down. They'll leave the oil in the ground because they know that they can get it out later at a cheaper price, right? So if the cost gets too high or too low, the strategic petroleum reserve is used to manipulate that stock price. Let's say oil gets to $90 a barrel, way too expensive. The government will use all of its oil that it's got in the strategic petroleum reserve. They'll dump that reserve onto the open market and knock oil prices down because they got too high. And then when they get too cheap, they'll refill that reserve. They'll go out and buy crude and jack the price back up. So they manipulate this thing. They keep it in a collar as much as they can. Now, COVID, it got out of control. Oil actually went negative. It went below zero. It's not showing it here in the chart, but I'm telling you, it broke historic records because oil was less than zero. They were taking oil and dumping it into empty caves because they had nowhere to put it. All of our refineries and our reserves, everything was full. There was nowhere to put it, and they just started pushing it into the ground. So COVID has to be ignored, but otherwise, we generally run in a collared range, and that collared range allows you to trade. You can trade an iron condor, double butterflies, things like that. But you can also just, keep it more simple, and you could do call spreads across the top and put spreads along the bottom, something like that. And unfortunately, they don't make it a perfect spread. So the low might be 66 and then the low might be 60 and then it might get a little wild and drop down into the mid 50s. So it's not perfect on the downside, but look at the top, it seems to be a lot cleaner than the bottom side. And of course, event risks like Venezuela or Iran, any of those can spike us for a very short period of time, but those don't usually last. Those are usually just blimps in the radar, and then we go back down to normal again. But what you want to do is every Wednesday, we get the Strategic Reserve Petroleum Report, and that'll tell you what the government is up to and where they're at in their reserves. They'll let you know, hey, we're really low in our reserves and crude is cheap, so we're going to buy X amount of crude over the next 6 to 8 weeks, or crude's really expensive and we've got a lot in the reserves, so we're going to be selling our reserves over the next 6 to 8 weeks. And that helps you confirm when we're at those highs that it's very likely going to begin that reversal, or help you confirm when we're near those lows, somewhere around 68 or below. When we get below that area, you can start looking for them to begin that buying process again. If you see us cross below 64, 63, and they still aren't announcing any buybacks, check to make sure that they have room to buy. Because if they've already bought up their reserves, or they didn't use much of their reserves across the high and we fell for another reason, then they don't need to buy along the lows. And that makes it more dangerous to try to pick, when are we going to turn and start working our way back up. But out of all the energy trades, that one to me is the easiest one to run, simply because the government doesn't want it to get too high, and the government doesn't want it to get too low. And they don't have to share that impact with OPEC nations and all of that stuff. They'll literally manipulate this sucker based on their own strategic petroleum reserves. Yep, yep. So you can look at something like the WTI crude for that. There's a lot of, I don't think you can necessarily trade WTI unless you're looking at the CL crude or something like that. There it is, commodities, US oil. That's the CDFs on the WTI. But you can see it's not quite as clean, right? That USO was much cleaner. What we got here? I don't know what that is. I don't know. So that was a nice reversal off of the high up there. I would have liked it better if we had poked up through the top so that we could catch those. And the target back to VWAP was a really good target. It took longer than I would have liked, but we got there. Nice reversal. And we did not really pause when we got back to the RTH open. Normally we would. That's a really good pivot. If you don't mark that one, think about marking it. It's good. I like that. But we didn't really respond to that one today. Nice. That ADR low held well when we dumped down there and tested it today. We never did get to the ADR high before we fell out. We are we hit the floor pivot today, or we got so close to it that we might as well say we hit it. We have not hit R1 or S1. We missed S1 by a couple of points. Yeah, a little bit. Let's see what else we got. I mentioned this build out of the second distribution this morning in the live stream, how we could um, try challenging this upper distribution by building out a level today in this lower area and have a second distribution by the end of the day, which would be by the end of the week. And that would set us up really nice for next week. The shallow area here can be moved through really fast if we do get a break back above that 6900. I mentioned that today this morning. We didn't get it, but next week, we could open, say, gapped up Monday night and just, you know, rip to the upside like mad. So who knows? Yeah. At some point, I guess I don't see the void you're looking at. I see yesterday's point of control. Oh, it's last week. Well, that's why we talk about reaching in the pizza box, right? After we set last week's point of control, Sunday night we opened and we came down and we took a lot of that off the table. Then later in the week, we came back down and we took more of that off the table. And then we had the drop and there was nothing left on the table to take. The pizza analogy. I like pizza. I'm actually getting burned out on it every Friday for about the last 2 years. We've been eating pizza every Friday, and I think at this point we're all burned out on it. Pizza and chicken wings. The people that we eat Friday night dinner with, they love them freaking chicken wings. Me, I don't care. I just want the pizza. But if they're gonna buy the wings, I'll eat them. Chicken and wings, chicken and wings. But we're so burned out from it. Now it's like, well, now what are we gonna do? And we just had hamburger and fries, so we're not gonna have hamburger and fries. I don't know what tonight's dinner is. Last night was biscuits and gravy and fried taters. Yes. Yeah. Sausage gravy. Yeah. And my wife does my wife takes the extra effort. She fries the sausage first, right? So that the sausage has that crispiness and it's all ready to go. And then she makes the gravy. Yeah. That's the way to do it. I do my own rolls, dinner rolls, um, cinnamon rolls. But when I am baking, I'm cleaning, especially when I gotta wait for dough to rise and stuff like that. So I'm constantly cleaning while I'm doing it. It works well. Do you use warm? I have not. Do you use warm ingredients? Like you get your egg out the night before and don't use cold eggs? Really? Yeah, it's aeration. You're supposed to aerate it. I was about to say, precision is the antithesis. It's the opposite of the best bread you'll ever eat. So to get rid of your precision, because I did the same thing. I was trying to be precise and methodical, and then after doing it for a while, I got to where I wasn't even looking at the recipe anymore. I was just kind of loosely winging it, and oh, it got so much better just by loosely winging it. So much better. Oh, of course. Yeah. Try looking at bread recipes from other nations. I have a friend of she was talking about her lunch, and I was like, "What are you having?" And she named something. I'm like, I don't even know what that is. You got to tell me." She's like, "It's bread and stew, basically, right? I'm just American version." So I'm like, "Okay, where do you get your bread?" She's like, "Oh, I make it, of course, like any Indian woman would." And I'm like, wait, like you make your bread every day? Because she says she eats this meal every day. And she's like, yeah, no, I just make it for the week every week. So of course I had like, we got to send me the recipe. I got to check this out for myself. So if you haven't tried it yet, try to make Indian bread or Greek bread or pick a nation. Doesn't matter. They all have a different bread and they all have a different recipe. And that's a lot of fun. Me and my wife have fun in the kitchen all the time trying different recipes from around the world. And bread is always high on the list of things to make. Don't cook bacon in the nude. The end. So we round tripped this thing. Um, I don't I don't feel like my morning briefing was off by very much, all things considered. I think I could have highlighted better that it was likely we would have a range day. I mentioned it, but not strongly. I could have really reinforced that a bit more. I think that would have helped. No, I don't think I was off, but I don't think I highlighted strongly enough the likelihood of us going sideways because sideways was a real valid uh, choice for today. Like out of all the things that we could do, I try to lean into what's most probable in the pre market. And of course, we can go up, we can go down, we can go sideways. So I try to anticipate what's more probable for the day and then really highlight that for the theme of the briefing. And I don't think I highlighted strongly enough that the sideways was a higher probability. simply because of how much volatility was being injected for the day. It just seemed like we was really gonna make that move. But I did mention sideways. I just don't think I pounded the table hard enough on that. I'm looking at tradinghours.com because we're getting really close to China going into their new year, shutting down for a week, and then they're going to come back and they're going to do this two-session event where they allocate monies for the next year into different sectors and industries in their economy. And I can't remember when the new year starts, but I know we're really close. So I came over to their website, tradinghours.com, and I'm just kind of looking around at when we're going to close with them. And it shows that it's going to be next week. The 16th on Monday, they will be open. While we're closed, they'll be open. And then Tuesday, Wednesday, and Thursday of next week, they'll be closed while we're open because that'll be the kicking off of their Chinese New Year. And if you trade in the evening or in the early pre-market, you'll likely miss their participation. You should notice that they are not home. And I heard somebody talking about it the other day, but I don't think it's going to steal participation. I have noticed over the years that you meet people who say, "Well, I just trade stock." And when you say, "Well, what about futures or what about options?" No, I just trade stock, right? And they're just those single thing. I just do this. And then you'll meet someone who says, "I'm an options trader." And you ask them, "Oh, you do stock too?" No, no, I just trade options. That's all I do. I just do that. Right? And then you got your futures traders, and they're real adamant that they just want to trade their futures. So I don't think that they're going to steal participation, but I do think we're going to see more participation because a futures trader who may have only traded the ES and the Nasdaq may start looking at that and saying, "Oh wait, now I can trade futures on Nvidia." Now, when it comes to why institutions trade options and whether or not this might reduce the options liquidity, I think it could threaten options liquidity from the institutional side. I really do, because options are illiquid turds. I argue about this all the time. That you'll take a good name, right? Take a good name like, say, I don't know, Tesla. And if we're in a bearish market environment, or if we get a sudden drawdown, you won't find options to trade anywhere because everybody will be piling in to like spy in the queues, and you won't find equity volume anywhere, or it'll be in one name like Nvidia. And if Nvidia is getting it, Apple won't. Or if if Google's getting it, then Amazon won't. And it's so hard to find good liquidity and options nowadays, which is nuts because we've never had it better than we have it now. So, because of that illiquidity and because of the time restrictions on uh, equity options, I think these single stock futures could steal institutional participation, and they might be way more interested in hedging their positions with these futures versus hedging them with options. One of the reasons the institutions gave up on options is because of that liquidity, and they use the ES to hedge their Apple. They'll use the NASDAQ to hedge their Apple, the futures. So why use the ES futures if you can use Apple futures to trade to hedge your Apple position? I think they'll love the hell out of that. You know what I mean? But you know who's going to win? We are. The retail traders are going to win this. This is so good for us because that liquidity is going to give us insight, right? Oh yeah. Yeah, sure. Certainly it does offer more trading too, but I use data as a tool. Yeah, data is a fantastic tool for trading. And the more data you have, and the easier it is um, to put that data together into a knowledgeable package, the stronger your thesis is for a trade, right? And that's been my trade logic for a long time, is to understand the data. We will have so much more clarity on positioning when it's something cut and dried like futures. Options, you have so many things that they could be doing. Sell to open, buy to close, roll it up, roll it down, roll it out, mix and match between different calendars and strikes and expirations. But I bet in the futures, they'll be way cleaner, and we'll be able to more synthetically replicate what they're doing to understand, not because we want to follow them, but because we want to understand where's the money, right? Like the old phrase, follow the money. I think we'll be able to follow the money a lot cleaner in these new futures. Yep. So I think they're going to catch on, and that they're going to grow really fast. I'm excited about it, really. When the micros first came out, I was aware of futures, but not trading futures. And then I heard about the MES and the MNQ was coming, and I started to get real excited about it. And I studied futures and got the understanding of the ticks and the points and all of that, and really started putting a game plan together. And I was first in the door when they finally went live. Well, I was ready. Like, I want some. And it's been a game changer. I don't trade options half as much as I used to. Probably not even a quarter of as much as I used to, because options was my only game in town back in the day. But I was able to grow so fast with futures that I was able to expand from only options into stock and options, and then into stocks and options for long term, plus the futures. It's been a game changer. Some of their symbols are, but they closed most of the symbols down. And I haven't even checked my token at it's been a long time since I've even checked one of the symbols, because it was so illiquid. You nailed it. And I am so picky about liquidity. And I was completely frustrated with them. It never grew, like they just couldn't get traction, they couldn't get eyeballs, and symbols started disappearing. I'm hoping that the CME will have better luck, and they're stealing the smalls idea. They've repackaged it and made it a much better version, but they're basically doing the same thing. Hey, he I will forever give him attribution for the micros. I really believe it was his influence, and to get the reduced PDF PDT, knocking us down to $2,000 for a PDT account. He has spent a lot of money over the years advocating to abolish it completely. He's the reason we have weeklies. Like, he's no, but it's now it's in the works. Like, it's not just a proposal, it's gonna happen. I don't have a date, but it's coming. But yeah, it's good to have some check, but it's really outlived its usefulness at 25,000. That's really prohibitive in our current world. I'm really excited for TradingView this year. I've been saying it off and on, but um, they now have access to options data, and they're allowing their users to develop tools on their platform to utilize that options data. And I've seen a little bit of it, and it's fantastic already. It's only going to go up from here, and I'm really excited about what they could are going to come up with. If you were on the YouTube, I changed its location to the playlist, and that might have interrupted the stream. And so sorry about that if it did. And I don't know why it doesn't pick up other people on the stream when I run through Restream, but you're not the first to say that it doesn't pick up other people that I speak to or that are speaking in the stream. I'm really frustrated about that, and I honestly don't know how to fix it. Um, it's got to be a way that I'm tying in to Restream, but I don't know how to solve the problem. But I did change the video location to streaming replays, and sometimes that can interrupt the stream. So if that happened, my apologies. I was it was after 4, so I was getting ready to shut the YouTube off. And so of course I was moving it over and adjusting the title and the description and all that stuff that we typically do. So the recording that I'm using is the YouTube. I just run it right over to YouTube, which records as we go, and that's what gets posted in the streaming replays. So unfortunately, no, it doesn't. And I don't know how to solve it. Like I said, I'm really frustrated with Restream. I wouldn't mind doing the afternoons with the OBS, but I already run the OBS on my YouTube in the mornings. And the last time I tried to run two YouTubes in the OBS, there was all kinds of issues with getting logged back in from one YouTube to the other YouTube that I am really not interested in trying that again. I am ending the YouTube live stream, by the way.